Welcome to the Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two professional money managers, Ali Crooks and Charlie Burton.
In each episode, we cover your burning trading questions and we cover all things from the world of trading.
Indeed we do.
So we're back.
We are indeed.
Now this is a little bit of a special episode, this one. So we're going to be covering, essentially it was stimulated from a question that we had in, and we're calling this the big debate. So this is one that rolls on year after year after year.
Yeah.
I hear this all the time, and we've had this question multiple times over the years, which is, you guys are very adamant about trading at higher risk to reward, so above 2 to 1. Is there anything wrong with trading at a 1-for-1 risk to reward ratio?
Says a lot about the questioner.
Yes, yeah. It kind of says, well, yeah. I'm not.
Please give me a high win rate.
Yeah. Or please say it's okay for me to trade it less than 2 for 1.
Yeah. Well, do you want to go first on this one?
Yeah, I mean, this is the reason I find this interesting, because it's a strategic technical question, but actually I think what's actually going on is it's more of a mindset issue. So I think the big challenge is a lot of traders come to this conclusion and say, well, why can't I trade at 1-for-1? Is it okay if I trade at 1-for-1? And I think a lot of the time the question's masked with the fact that the trader actually is struggling to trade at any more than 1-for-1, because obviously holding your trade for longer, be it a 2-for-1 risk to reward, a 3 or even more, requires a stronger will, more discipline. And I think sometimes traders are asking that question because they're looking for a way out. And there's a logical answer is, of course you can. You can trade at 1-for-1 if you've got a high enough win rate. But the challenge is you've only then really got one lever in your, you've got one weapon in your arsenal, one lever you can pull, which is the win-loss ratio. If your win-loss ratio takes a dive, then your overall result does the same thing. So yes, you can do it, but whether it's a wise thing to do is another argument.
Well, it comes back to, as you quite rightly say, it's a psychological issue. So first things first, one of the first things is that most traders have that desire and that need to be right. So the need to be right is inherent in all of us from life in general. And so we carry that over. We're taught in university, in schooling, in work, that being right more often is a good thing. Mm-hmm. And then we come to an endeavor like trading where actually it cannot be. You could actually be right 90% of the time but lose money if your risk reward ratio is sufficiently inverted. So that's the first thing. So they have to look at, why am I wanting to, as you quite rightly say, to only have a 1-to-1 risk reward ratio? So the need to be right is one of them. Patience is another, that people lack the patience to actually hold on. And it comes back to these, I remember there's the study that was done a long time ago, walking the streets. A university did this in New York, where they walked around offering people $10 now, or they would take their details down and give them $20 in 2 weeks or a month's time. And the large majority of people said, no, actually, I'll just take the $10 now. So they had the opportunity of taking 100% more money if they just waited another 2 weeks or whatever it was, but they couldn't do it. And that is inherent in trading as well. The delaying gratification is so difficult. But again, it all comes back down to our psychology. Why do we lack the ability to delay gratification? Comes back to our times in caves. The food, when the food's there, you've got to eat it because you don't know when the next meal is going to come. And we see that in our pets, in our cats, in our dogs. They don't know when the next meal is going to come, so they're going to wolf it down because they don't know. And so it's the same thing with finance for us when it comes to trading. We want to bank it because it just comes from that DNA within us. Anyway, you add, and then
I think elaborating on that, I think we're also in an age where if we want something, we can get it within 24 hours delivered to our door. We can order a book online and it be on your phone within seconds. So I think there's a lot of subconscious stimulation and subconscious reinforcement. If you want something, you can have it immediately. And I think every generation will look and say the next generation can get things more quickly and more easily, but it's very prevalent in the current society. And I also think traders should acknowledge that winning feels good. And I think sometimes that we don't talk about that enough and don't get into the realm of actually saying, look, I, as a human, like you said, I want that immediate gratification, and also winning feels good. But we're trying to do what the 20% of traders are doing, not what the 80% are doing. And one of the things I say to traders that I work with is, if you're feeling something in that moment, like I want to cut the trade at 1-for-1, or I want to get out and have that feeling of a win, ask yourself, is that the feeling that the 20% will be having, or is that the feeling that the 80%? Now, my view on it is most traders will have that feeling, but the 80% are the ones who are responding to that feeling and getting out at 1-for-1, or cutting their trade early, or thinking or wanting that feeling of feeling good or feeling of accomplishment because they've had a winning trade. So a lot of it comes down to being addicted to the good feeling of winning. And that's something you don't just get over in one trade. You've got to work hard. It's like building a muscle. You've got to work and build that resilience up. So, and I think it's always interesting. We've talked about this on other shows about the studies that have been done with traders who, they might have a higher win rate, but they've got an inverse risk to reward, or they're certainly losing more on trades than they're winning. So to me, it's about training yourself to do what the masses of retail traders aren't willing to do.
Yeah, coming back to what you were saying about feeling good as well. Unfortunately, that's what traders want to do. They want to feel good about their trading all of the time. And yet the realities of trading is actually it's grim and it's grimy and it's dirty and it's hard, and the market is throwing everything in its arsenal at you to get you to quit or to lose money. And I think if people keep that in their mind, the market is trying to do all these things in order to put you off, in order for you to get frustrated, get depressed, get whatever, get emotional, because if it gets you into an emotional state, then you're more likely to make more mistakes. So if you think of it as a game that the market is trying to goad you into doing all these things, you're more likely to say, hold on a second, this is the market trying to get at me here. And if you want to feel good, go and get a massage. You don't get into trading to feel good. That's not the way it should be. And so if you feel good on a winner or a series of winners, how are you going to feel when you have a loser or a series of losers? You're more likely to be frustrated, depressed, whatever, whatever the emotional spectrum is down there. So we need to get rid of those emotions of feeling good about winning. But that then comes back to your point about having high win rates, because the higher the win rate, the more we feel better. And that comes back to, like you're saying about the stats then. So the stats suggest that more people are chasing higher win rates, and yet we know that the majority of traders tend to be losing money. So therefore, don't we want, as you just said, do the opposite of what they're doing? Yeah. It's a conundrum, that's for sure, but it's certainly something. I've got something else to add, but
No, that's good. I just wanted to pick up on the idea the market's throwing everything at you. I always say it's trying to tease you. It's trying to lure you in, and right at the point when you want to press sell or get out of the trade, that's the moment where the learning happens. It's how many times, even if you stay in that trade, the trade rolls over and stops you out. If in that moment you didn't succumb and break your rules and get out of the trade earlier than you planned, cut the win short, you actually did the right thing. And that's the difference between the trader who can say, no, I stuck to my plan, I stuck to my set of rules, even though the trade lost, rather than the trader who's addicted to that short-term feeling of, well, at least I banked some profit. And it's these sorts of phrases that can get you into trouble.
Or sometimes I had a message come through just literally last week of a trader who was in a DAX position and had shorted it and it was a strategy he was following, and it started coming up closer towards his stop loss. So he, bailed out of the trade to try and save himself those extra few points. And then guess what happened? The market then rolled over, and if he had stayed in the position, he wouldn't have got stopped, and it would have just gone over to his target. And of course, now what? He's frustrated, he's got these emotions, angry at himself. He's carrying those into the next trades as well. And that's what it is. That's what this game is all about. As you say, the market's trying to goad you into all this stuff. I always say it's like having the market is the devil sat on your shoulder, whispering in your ear, trying to get you to do these things. Because the more of those things you do, the more that you allow yourself to go along with the peaks and troughs in your emotionally, but in line with your P&L, then it knows that you're probably more likely to go and make more mistakes. So it's an interesting thing I was just thinking of. In the original Turtle Trader experiment, if anyone's not listened or read the Complete Turtle Trader book, then you really should read it. I think it was the Complete Turtle. There's a few Turtle Trader.
There's a series, isn't there?
Yeah. Yeah, but this was the book on all the individuals in the original Turtle Trader experiment, and one of them, and I've forgotten his name off the top of my head, and he's a very successful money manager over in the US, has been since the late 80s when he left the experiment and then set up on his own. But his win rate, coming back to our theme of the day here, is very low. It's 30%. He's a trend-based follower, so by default, his win rate is very low. Highly successful, highly profitable, but he'll spend 9 months of the year underwater. And his investors, even though he's got this amazing win rate, still he loses lots of investors. Even though he's got this incredible track record, they still can't stay with it, because when they're in the middle of it, even as investors, knowing his track record, still like, oh yeah, but that guy over there is making money every month. And so then they'll go to the guy who's making money every month, but then when that guy goes and has a losing month or two, they're a lot bigger, and this guy just is the opposite way around. Low win rate, but when the wins come in, he's highly, highly profitable. So it says a lot about our mindset, whether we're investing or we are a trader ourselves, coming back to that whole win rate thing.
I think a lot of the time we're trying to we don't see the differential between looking at it before you doing it. So the classic one was those investors are sitting there going, they probably were like, yeah, I'm okay with 6-9 months of the year not making money because I can see the end return. But like you said, as soon as they're in it, it's a different ball game, and that's I think where traders can see from the outside going, yeah, I'll be able to cope with that. But then when they're actually doing it and they're feeling the emotions, suddenly they go from a longer term perspective in their mind to a shorter term perspective, and everything's about the trade they're in, and they just want to feel good. They just want that good feeling, whether it's the winning trade there or jumping to the other investor because he's winning at the moment. It's the temporary good feeling that as a trader you've got to be able to put off.
Yeah. On a personal note, I know I'm at the extreme end, but I'm now at the point. I'm not advocating this, but I'm at the point now in my trading. I can have one good trade per year, and that'll be responsible for the bulk of my gains. I'm not saying that it will just be one trade, but I trade in a way that one good trade in a whole year can be responsible. Don't get me wrong. I'm still going to have plenty of trades. I'm not looking for one trade a year.
That's key, yes.
I'm almost completely in trades or in the market almost all of the time, but I'm throwing that fishing line out and constantly having that, pulling the line out and there's nothing on the end of the line, or maybe a small fish and you throw it back and you're waiting for that pike. So there might be lots of small trades, whether it's wins and losses, but and plenty of losers. But I know that I only need that one trade. Now, how many traders out there can trust in their method that much that they only need one trade in a whole year, maybe two, to really make the bulk of their gains? 80-20, which we'll talk about separately.
Great. So I think it comes down, we'll finish on the P word, which is patience.
Yeah, absolutely. Yeah, patience. Using everything we've just said to put it into perspective of where you are as a trader with what you're doing. It doesn't matter whether you're intraday trading, swing trading, and frequency and all of that stuff, but patience, perspective is important to realize, oh, what am I doing? Am I trading like the masses, or am I trading more like Mr. Crooks or Mr. Burton?
On that note,
think about.
Yeah, it is. So his name's Charlie Burton.
And his name's Ali Crooks.
Trade safely out there.